talk about Tesla. So Tesla's going to report today after the close. We already kind of previewed it, I think, earlier in the week on one of the pods here. The implied move is not small, okay? And this thing has actually moved around a lot after earnings over the last year. I'm looking at the stock at 182.5 or so. The implied move in the options market is about $13 in either direction. That's just tomorrow. Talk to me a little bit, because you put together a bunch of data for us, which is not something I am used to seeing in your worth charting reports here. There's a lot of fundamental data. You want to talk a little bit about how the street is viewing this stock?
Yeah, I thought for this conversation, and there are no judgments about that data. It just shows how vague it all is, and it's why charts have their problems, but the problems are nowhere near the problems associated with the guesswork of what a stock is worth 12 months hence. Let's look at in no particular order. So, just for instance, if you look at the blue down right now, the Tesla's price per share is 180. And Wall Street has a 12-month price target. This is not one analyst or five. This is 50, right, of 208. And so when you consume that information, that advice, how do we consume it? Well, they're saying if we buy here at 180, it'll be worth 208. And again, the error rate of one man or one woman, but not 50, right? And not just 50 random people, all people who have gone to typically great universities of some kind in order to get those jobs at Goldman Sachs and Morgan Stanley and Bank of America and more, Credit Suisse and so forth. And then not only do they have those big university degrees, they get hired, they're certified. They have CFAs and CPAs and MBAs. And then they take all that and they apply their knowledge to General Motors and Ford and to China and to consumer spending trends and auto sales, everything. And then, so with this, should we buy this stock based on the consensus that it will be $208 down on the bottom of your screen in 12 months? Well, let's say we tried that exercise a year ago. Look up. So in yellow, a year ago, Tesla was trading at 325 and Wall Street said it will be worth 320. They're very cautious, said it won't go anywhere. Did it go anywhere? It's trading at 181, 180 right now. It's down 45% from where consensus. This is not a point of making fun of Wall Street. It's not their fault. It's undoable. No one knows where the hell a stock's going to be 12 months out. It's absurd.
Yeah. And so you had some data, and I think this is really interesting. It's a good little TikTok of some of the things that we look at when we're trying to kind of put together a trade idea or just kind of rethink an investment idea. Let's talk about institutional holdings. So, this is one where you see some big, capital pools. Some have been adding and some have been, been selling. And a lot of this, this is all pretty random stuff too. Some of these, these fund managers might have owned the stock since the IPO in 2010. Exactly. And some might have bought it when they got all geeked up about it a year and a half ago when it crossed $1 trillion in market cap. And maybe they're also selling here, or maybe they're averaging down. Right.
And so the point is, just as the sell side analysts who, without being particularly flipped, have no skin in the game. They're just writing about it, right? They're of an error rate that's hard to cope with. Well, this is the buy side. Now, there's this notion of smart money. Now, honestly, look at those names. You're telling me those people on the top, those people are smarter than the ones on the bottom, or vice versa, the ones that are selling? That's absurd. There always is the circumstance where big money is adding. You can see that. And big money is selling. Look, I have a cameo here. Oh my goodness, you need.
Look at that guy. Look at that guy.
Can you say hi? And I'll give you my phone, and you go over there. Okay, I love you.
Daddy, I have.
Oh my.
I have a triceratops truck.
A triceratops truck.
Wow. No way.
Okay. All right, you go take this. I love you. I love you. Take that. All right.
That's gotta be.
My goodness.
Like something from the Transformer.
It must be Triceratops and a truck put together.
That's pretty good stuff. Well, let's go. That is one cute child there. Let's go to. I love these charts right here that you have the 2023 EPS estimate versus the stock price, and you see.
Yeah,
we can see a trend there, huh?
Here's another a way to. So this is. It's not their fault. I did this for them. That's why I got out of this. I couldn't stand it. What you see is the stock price in black, and you see the 2023 estimate for this year. So notice that the stock goes up all through 2020 and 2021, and analysts are revising their estimate. Tesla will earn $3. Actually, it'll earn $4. It'll earn $5. It'll earn $6. And so the stock starts going down, though, which you see a year and a half ago, and analysts are still revising there. So they say in 2023, it will earn $6.10. That's where they were as recently as 7 months ago. And now they've changed their mind. They say it's going to earn $4. 6 till 4. Meaning all they're doing, it's not their fault. Again, this is just they're just following the price. If the stock goes up, they revise their earnings up. If the stock goes down, they revise their earnings and their price target down.
Yeah, well, I don't disagree. One of the things I'll just say this is that one of the pillars of the bull case here for Tesla has been the earnings and margin expansion story and their early lead in EVs. But you know what? The truth is they have a huge issue going on with China right now. And I think it's not really been focused on too much by the bulls here that they have tremendous competition in China. We've been talking about the competition here, in Detroit from the Koreans, from the Germans, from the Japanese. And you know what? No one's really paid attention to that, but they have real competition in China. They're losing market share. They've gone from 14 to 10%. Now, that doesn't mean a whole heck of a lot if you think about how quickly maybe expanding that market is and their push towards EVs, but there's a price war going on and they keep lowering prices. I think they've had 6 price cuts across many of their important regions. And so if margins are going to be under pressure here, I think a lot of investors are saying, okay, well, maybe, you know what, we can handle that in the near term. But if they're going to make it back in volume and then they're basically have the ability to kind of get leverage out of their infrastructure, whether they're pricing, that they have with the input costs and this and that, whatever, fine. I just don't see it. So, you guys know I've been short with defined risk here. I'm keeping it into the print. But let's talk about the levels here, because last night on Fast Money, Carter, I said that I think it's kind of a 1 up, kind of 2 down scenario. Like, yes, if the implied move is, $13, could the thing be up $20 towards 200 in a heartbeat? Yes,
Sure.
it could be if it's not as bad as expected. But if it's worse than expected and people are starting to extrapolate this out a quarter or two, of problems, stock's going to fill in that gap, in my opinion, towards 150, which was the gap from the January earnings report. So talk to me what you see in the charts here.
Yeah, so we'll move through these fairly quickly. This is going back to the COVID low, of course, $30 up to 400 and change. Let's put some lines in. Let's put some more lines in. Put some more lines in. It's very symmetrical, right? I mean, it lends itself to uptrend, downtrend. Now the question is, but the here and now is a little more nuanced. Let's keep going. And so if you look at the here and now, we're sort of muddling. We're not quite, we had that basically collapse from 200 to 100, down 50%. We have the ricochet, the 100% recovery, 100 to 200, and we're kind of stuck. Let's keep going. So here's with the 150 moving average. And then the next iteration, if you were to do the relative strength. Now this is a 2 panel and you're looking at, again, Tesla on the top. It's a bit squunched because it's got the 2 panel, but look at the relative performance. Its stock is up since March, but it's not keeping up with the S&P. I don't like the setup. Again, my thinking is to be short into the print, but certainly if you're long, buy some puts as protection or take some measures. That would be my thought.
Yeah, and again, this goes back to our friend Armand, and he said there's no rigor here, just guessing. And again, we've been doing this a long time, and when you're trading things into an earnings print, it does tend to be very binary, especially if you're doing it with defined risk and using options. So I will concede that, and I'm not a huge fan of a lot of retail investors punting that way. I've been doing it for a long time. I risk what I'm willing to lose. In this situation with Tesla, I've had a pretty decent trade on and a winning trade for the most part over the last, let's call it, year or so. So I have a little capital to kind of play with here. But I'm not doing it in the weeklies either, because if I get the direction wrong, then I'm wrong. I'm doing it in May, because oftentimes in a name like this that's very controversial, you might have a move that doesn't make a whole heck of a lot of sense because it might be short covering or something like that. So again, that's the way I'm also playing it, but it's not something we're encouraging our listeners or viewers. Nothing that you hear on these program, on Market Call, or on the tape or OK Computer. It's not investment advice, people. We're just kind of giving you the different inputs that we're looking at and some of the decisions that we make. And hopefully that helps inform some of the things that you do. All right. One last thing before we get out of here, because it's in the auto space. You and I were talking about Ford and GM. And I got to tell you, Carter, this Ford chart really looks like, I think I said, a disaster waiting to happen. You see that $11 level here. This is a 1-year chart. And I just look at that move that we had, late last year, I guess mid last year. The fever broke. Here we are. We're back along the bottom here. If we look at a 5-year chart, we see that the stock is below its 50 and it's 150, and everything we just talked about in the auto space. I mean, we went from tremendous demand and super undersupply and a hard time getting workers, hard time getting components, like the list goes on and on during the pandemic. Now, if you drive around in any like kind of suburban area and you look at a Ford or a GM dealership, they're packed with cars, right? At a time where interest rates have gone up very high. And so there's just less demand for the cars here. Thoughts on my little lines that I drew on the Ford chart? I got a quick trade for it.
Yeah, I look, Toyota Motors at or near 52-week low, so it's not acting well, as the expression goes. For GM, it's not the case with BMW and Mercedes, but in general, I don't like the space. Maybe I have one comment about rigor. Is that okay for Armand?
Yeah.
Okay, so Armand, I talked to today one of the top 15 holders of Tesla. They called me. Why the hell would they do that? Because there's no rigor.
Yeah.
You don't know what you're talking about.
Yeah. Hey, listen, Armand, come back tomorrow. We'll have another one. All right, real quickly on the Ford, and this is me, maybe not particularly rigorous, and just punting. I'm a gambler here. If I'm looking at this thing, I say to myself, I think we're going to kind of break this $12 level. I think it could be a straight shot to 10, and it could overshoot if there was a guide down when they report in the first week of May. So I wanted to find my risk today when Ford was trading at about 12.35. I could look at the May expiration 12 put. It costs about 50 cents. You can do the math on that. That's just a few percent. It's a break even down about 6% or so. And what I'm trying to do in a market like this is, like, if I want to be kind of bearish in a market that I've just said, it feels like it wants to go higher. Buyer, like sell-offs are getting bought here. I get it. Okay. I want to look to kind of make some of these sort of little chippy trades here. I'm going to cut my losses if the stock starts moving higher or just goes sideways and the option starts decaying. I'm going to cut my loss at a 50%, mental stop there. That's the way we do it. So that's the way I'm thinking about Ford. We'll definitely update GM and Ford. We'll definitely update Tesla. We really appreciate all the work that you do, Carter. We appreciate you coming on Market Call. If you guys want to see the rigor that goes into the work that Carter does, go check out worthcharting.com, because some of those reports are about as good as it gets. And for me, technicals are a really important input, and I need a guy like Carter to help me through this thing, because sometimes just looking at one picture doesn't do it justice, right?